Hi, everybody. This is Gary Dean, and this is our another video report for Wednesday, April 20th, 2016. Bulls looked like they were going to, at least on the Dow, they're going to give it a shot for, making some kind of stretch towards the highs. But towards the end of the day, we saw it sell off, and I'm still, on the side that this market just looks absolutely exhausted. It has not had any type of breather whatsoever, and it's been a lot of points. And really, the biggest issue when we go this long without any kind of back testing or testing of support, are the bulls get very complacent, and then when there is a big move to the downside, everybody panics, and then the whole momentum switches to the downside. We have not seen that yet, and we've seen just a lot of pushes to the upside, and it's all coming off of some type of news. The last two big moves up have been these rumors of some kind of oil production freeze, and each time the rumor has been denied, and you just see the indexes continue in the direction from when the rumor started. But the thing is this, is that we're even with these up days that are going, it doesn't really make things safer. Obviously, we have to wait for some type of support to start breaking before we see any type of reaction move to the downside, and until it does, the bulls are in control. But the longer they push it and the longer they keep this going without any kind of tester, the more risk there is for just an outright straight down drop when everything is said and done. So internals, nothing's really changed. Again, a lot of these are from yesterday because they don't update for a while. Advanced decline has never seen these levels. I do believe this is probably the most important chart to follow right now, because you could see that the S&P is at resistance as the VIX is at support. Everybody gets overly bullish when the S&P is up here and the VIX is down here, and then they get overly bearish when we see the S&P down at the lows and the VIX are at the highs. And again, taking long positions or just not really paying attention and expecting the markets to move higher when we've seen these kinds of charts and these setups, is it's been a losing trade. So this is what one of the ones that are flashing a major red flag. Just taking a look at the put call ratio, again, we still have this bearish divergence for the markets where protection is being made right now, and there's no pullback whatsoever on the S&P. So finally, it's we're taking a look at the bullish percent. Again, this is just flattening out, and just being overly bullish when it's at these levels has not really been a too good of a trade if history is going to be our guide. So let's take a look at our regular charts. Here's the daily chart. Again, bearish divergences, very overbought. These are your resistance lines. They tried to punch through the 2103, made it close to the up to the 2119, but fell short and then sold off towards the end of the day. But even if they push through that, then we have these other support levels that are here as well. So with the bearish divergences and these support levels and no real breather whatsoever, I think it's going to be very, very difficult to push through. And we also have 5 waves up, and typically after 5 waves up, you get a 50%, 62, or 78% retracement of this entire move. And if we just take a look at the 60-minute chart, that would be eyeing us down someplace into these levels here. That would be the 1961, 1925, and the 1874. So being we have not had any pullback, if we see something that comes down to the 1874, people are going to assume that the market is now back into that bear market, and they're going to have a tough time bringing it up. But really, the main thing for starters is we need to see the bears push it through to 2077. That will give us the first clue that things are starting to break down. But really, the bull bear line is at this 2032. If they get it through there, that's when I would start anticipating that we would test some of these support levels. So if we take a look at the S&P on the 15-minute chart, we have yet another bearish rising wedge. Bearish divergences, very overbought. And you can see that the bottom of this wedge is right around that 2099. But if we look down, let's just say it would have to get through the anywhere between the 2088 and the 2090 to really get this wedge going. And again, the main thing for the bears is to get it through this 2077 level. taking a look at the Dow. The reason why I'm showing you this is this is pretty much the leader today, and you can see where we have, you know, 1, 2, here's wave 3, 4, and now we made a wave 5. Now, the reason why it's important is if I move to a daily chart, so we have 5 waves on the end there, and here you have 1, 2, 3, 4, 5. So on both the short-term charts as well as the 60-minute charts, you have your 5 waves down. And again, remember what I was saying, that once these, you know, this move completes, typically what you get is a 50, 68, or 62 or 78% retracement. So that's looking for the Dow to come down and test a 1682, 16500, and a 16,041. We haven't had any kind of test like that. So if it does happen again, it's going to be tough to move, move back into that bullish mode, because right now there's been no test. So right now, again, until we see any break of support, the bulls are in control. It doesn't make this market any safer to be complacent, but we need to see some reactions to the downside before momentum picks up. So with that, have a great night, and I'll talk to you guys tomorrow.